All right, we're live.
Sweet. Tevis. We may have another judge, but they might be late. So who knows? We'll see. That being said, guys, I am super excited. This is a stock that I love, and I've never gotten Tevis's take on it, I don't think. So I've been wanting to pitch him this stock for a little bit. The company that I'm talking about may as well be the future of finances, at least the way I see it. Okay. This is the future of all banking globally. Okay. What I'm talking about is Nubank. If anyone saw any of the titles or the thumbnails, excuse me. Whoa. Too much live streaming, huh? That being said, Tevis, what do you think about this Latin American exclusive company, Nubank?
Yeah, I mean, we've talked a little bit about it before, so I'm not going into it completely blind. I already have some pre-baked thoughts that I'd love to talk through.
Okay.
But
Like the stuff you don't want to share?
no, I mean, so my main bear case is I don't want to start with that, but I already have a couple in mind.
You got bear cases. Okay.
Yes.
All right. Good luck surviving with those. Okay, so I recently just did a video today on Nubank, actually. So the only reason why I wanted to do Nubank is to promote my own stuff, obviously. You like that?
Yeah.
So yeah, I'm going to be talking a little bit about stuff that I've already covered on that video. I'm not going to be covering everything, or else people wouldn't click over to there. So I got to get something a way for them to go over there. But I'll also be talking about some stuff that I haven't covered over in that video, stuff that I forgot to. So Nubank is a large neobank. Okay. This company has about 80 million users, 80 million normal customers like you and I. But then it also has an additional 3 million customers on the small business banking side. So they really do handle everything. And whenever I mean everything, I mean they have a payment side of the business. They've got a regular banking side of the business, lending, what is it? Investments, crypto, everything. What did I miss? Banking infrastructure.
Mortgages, car loans.
Nope.
Not everything. Companies.
But they have already showcased that they do want to get into that stuff, so that will happen. But that is the future for Nubank. That's why that's why I believe that there's going to be further growth in this company. Is that they haven't actually gotten into everything, but they do have all the customer bases to get into it.
Okay, so let's pause. Really, when we're talking about fintech companies, we're talking about two camps. When you say lending, right? You have companies that do mortgages, personal loans, like student loans, like SoFi, for example. And then you have these fintechs that mostly do low barrier to entry, tech empowered financial products from like investing and then crypto and like brokerages and then do like
But that's not Nubank.
Okay, so where do they fall in that?
So Nubank, 78% of their income comes from lending. Okay. That's credit cards and that's personal loans. Okay. So 78% falls into those two categories. So they are still very much a big part is their net interest income side of the business. The other side is from the regular things that you'd see in fintechs like Chime and stuff. Interchange fees are a big portion of that, which also does fall under credit cards and these sorts of things, but debit cards, spending, that sort of stuff. The purchase volume side. Now we follow SoFi a lot. So this is a reason why I love this company, because it's so easy for me to understand. Okay. Whenever you're talking, you're talking about a couple of things. So one, get the customer in as cheaply as possible through customer acquisition costs and hope and pray that customer is a high quality customer. You can force it to be a high quality customer by increasing your customer acquisition costs, being very choosy who you bring on, or you can bring on everyone and sort of get a good mix of the socioeconomic classes. That's sort of how Nubank approached it. They are getting customers on about 80 to 90% is through unpaid referrals. Okay. They have the lowest customer acquisition cost globally in fintech, bringing on 80 million customers, and most of them are free. Okay. This has led to a very natural sort of growth in terms of their multi-product sort of features. They have two main products that you want to talk about. It's the digital bank, right? And then it's the credit card. Everything else is more of a cross sell from there.
Can we throw up something on the screen?
Yeah. Me?
Yeah.
Okay.
You're the one pitching it, mofo. Like, I made a full deck last time.
Well, hey, I didn't say I made a deck. We can go through their investor presentation if you'd like.
Sure.
I did actually make a invest deck, but it is actually on my video. So I do have it ready if we need to go over to it, but I'm going to hold it for a little bit. But look at Robert, eh? Close enough, I suppose. Honestly, Tevis was nowhere to be seen. Really appreciate it, Robert. Tevis was nowhere to be seen. That's why we're even late in the first place. Can you do me one better, Tevis? Can you change the view so then our cameras are in the bottom right or bottom left?
Sure.
Like making the screen a little bit bigger. Oh, buddy, love you. Okay. So before I get into this, whenever you're dealing with 80 million customers, that there is like, you're starting to talk about issues of saturation. They have 46% of the adult population in Brazil, just starting to break into Mexico and Colombia. These are the three main countries that they're actually covering right now. Okay. Which most of them fall under that category of both banking and credit cards. But they think they are big believers that they can break out into so much more, right? They look at this stock and say, you know what? We really haven't actually broken into the investment game or the personal credit or unsecured or secured both ways, or small business banking or payments or insurance or any of these things. We're still in the first innings of this business, right? But obviously they are being able to capture an audience better than anyone else in the entire world.
So currently they only operate in those three countries: Brazil, Colombia, and Mexico.
Correct. So this is the one thing. I'm going to say something really controversial right now. Okay. A lot of people, whenever talking about both SoFi and Nubank, they say, well, maybe that these companies will help each other out. That's maybe the number one comment that I hear from these SoFi bulls is that, maybe Nubank can help SoFi and SoFi can help Nubank. The real answer, and this is what I truly believe, Nubank doesn't need SoFi's help. They have created a technology that they have shown to be able to deploy into new countries in less than a month and have extreme success in those other areas. Okay.
So what's their differentiating factor? Like, what's their secret sauce that you think will make them successful in Mexico when they only have 3% of like the market share, let's say?
Well, so they are much more. So although it's hard to show off in this slide, they joined Brazil back in 2014. They joined Mexico in 2019. Okay, the growth rate in terms of the same amount of months broken out this far is much in favor of Mexico. Every country that they've gotten into after the last has been much faster than the previous new country that they've actually broken into.
Yeah. What I'm asking is, what makes you think? Because obviously they're going to go, like, once they perfect that, formula to launching internationally, they're going to do it more efficiently. And obviously they're going to see outsized growth when they first break into the market, just by picking off the low hanging fruit of early adopters. The question to you is, what makes you confident that they won't plateau in an international market where there's higher competition, like Mexico, for example, comparatively to Brazil?
So I'm not a believer that Mexico does have a more favorable market. I'll show you a slide here from my presentation. If I can full screen this would be amazing. Okay, so if we actually look at here, Mexico versus Brazil, for example, the unbanked population, which is really where Nubank specializes, is insanely high in Mexico, much higher than Brazil's has ever been in. The percentage without credit card is very, very high. Although we look very positively at Mexico, in terms of their financial infrastructure, it is like worse off than Brazil. Brazil has been much more favorable. So I'm personally in the big belief that the population's super high, the amount of people under 30 is huge, without credit cards and unbanked is massively favoring Mexico. They only just actually released that they were that they broke into Mexico. Whenever I went to the looking back to the prior slide, you saw that they had about 3% market share in Mexico, right? This is the slide that I was showing as well, from the growth of each new country that they've broken into has been faster than the last. That being said, whenever actually showing off, what was I just talking about? Jeez. Oh,
So
the 3%.
basically,
Yeah, so the 3% in Mexico, that was only credit cards. They've only just in May, May of this year, gotten into the Nubank accounts, which is where they've exploded in terms of their total customer count. They just got that into Mexico in May. They said in the first week, they got 500,000 signups. And then in the first month, they've gotten 1 million signups. That was just in May. So this quarter upcoming is going to have this new cohort of people that they've never seen, in Mexico for their new accounts, which will obviously cross-sell into their credit cards and vice versa. There's going to be great cross-sell there.
So it seems as though the trend is that the higher the percentage of unbanked, the faster the growth a new bank is going to have. But like, I'm just trying to understand that, I see Brazil there, right? Months to launch, Brazil was basically flat, judging from this chart, until Colombia really took off, and then Brazil started this very linear growth trend. And I get it, because
these are on different timelines though. These are the months since launch.
Yeah. Oh, I see what you're saying. So they're
this
not.
Was back in March of 2014.
Right. So, but it makes sense where Brazil is the slowest growing, because they have the smallest percentage of people that are unbanked.
Correct.
And that trend holds for the others. I'm just trying to understand the strategy, because I'm just going to compare it to, let's say, SoFi, right? Because that's just what we know.
Yeah.
SoFi is diversifying in terms of product offerings to say, okay, we have credit cards in the US. Now we're going to offer direct deposit in the US. Now we're going to offer buy now, pay later in the US, so on and so forth, to build that ecosystem. Whereas New, it sounds like, in addition to new product launches, they're also just going really rapidly into international expansion. And that's something. Yeah, go ahead.
So not as fast as people think. They were supposed to be in Argentina already. Back in 2018, it was going to be their first country that they were going to launch in was Argentina. Some political changes had happened with the presidency, the current standing leadership in that country. That changed. It became unfavorable to go into Argentina at the time, so they actually canceled it. So it's been slower than what people had determined, but yet even with that, you could just see how the growth has been, right? That's part of the amazing thing, though, is that I do think that Nubank's explosive growth leads to a lot of risk in terms of not being able to sort of manage how they grow. Localization is one of the hardest parts that companies have to deal with, is bringing a product to a new country and getting it right. Like Brazil and Colombia and Mexico, they don't even speak the same languages. They're they started out in Brazil. They all speak Portuguese, and then went to Mexico, where they all speak Spanish, and still broke into that market with good localization, good marketing that actually hit the local population there. And now we're starting to see people, really explode into it with the new accounts.
Is Argentina still on the roadmap for them?
Yes. Yeah. They want to be here's the thing, is they've spoken about, they want to be everywhere. This is a global bank, in my opinion, over the next 10 years. Remember, this company, their first product that they sold was in March of 2014. So since first product sale, this is not a 10-year-old company. They have 80 million users. Okay. They have 80 million users. It's a profitable business. Okay. Unlike SoFi. And where, let me bring up my spreadsheet. Everyone loves the spreadsheets. Okay. Everyone does.
The thing that I'm feeling, and it all sounds great, but the thing that I'm failing to understand is what makes them special.
Well, it's their technology and their marketing. They're the best. No one else has been able to touch it. The
What
current
do you mean
cohort.
they're marketing?
Well, they're a fun company. So very similarly to Cash App, where what's different from Cash App from SoFi? Well, it's hard to put into words, but whenever you look at the new customer counts, it's the customer acquisition costs on Cash App are nearly $10, and millions and millions of people flock over to there, but yet it takes $350 to put someone onto SoFi's platform.
Well, yeah, that's because SoFi has an ecosystem of products that Cash App doesn't offer. So it becomes more. But my point, so that's what I'm saying. Is it just like they'll offer the exact same product with the exact same rate benefits, and just because they have a fun flair to it or more marketing, that's what makes them appealing? Because that doesn't seem very strong to me.
Well, it's much cheap. So no, they've cut in a lot of the fees that the incumbent banks offer, like account fees or overdraft or all these things.
Because
They're getting
a neobank.
yes, because they're a neobank, right?
Sure.
So they've cut a lot of those fees. They made it a much more approachable offering, and so this is the thing that people talk about a lot. Like whenever I talk about the difference between the customer acquisition costs to getting that back in terms of how fast it'll be to make that break even on the customer, right? For SoFi, from every piece of math that I did, the numbers that I used were much more favorable than what Anthony Noto had said. They said it was about 18 months to break even on the client. Okay. From what I could see, it was about 460 days, which was about a year and 3 months, really. About 16 months versus 18 months, something like that.
Is there other neobanks in Latin America?
Yes. Yeah. I'll talk about that in a sec.
Okay.
So a Nubank, or sorry, Cash App, which is an American company, has perfected the customer acquisition to how fast it is to break even on that customer. About 40 days, about 39 days to break even on the customer after acquisition. Okay, which is incredible whenever you're comparing it to SoFi. You're able to acquire a customer, get that break even, and then go put that money back to work to acquire the next customer in 39 to 40 days. Nubank, it's 19 days. 19 days to break even on the customer acquisition costs. And that, whenever comparing just to 2 years ago, the average revenue per user was half what it is today. Half. They say a user that's on the platform for more than 2 years, the average revenue per user triples.
Right. So can we it all sounds great, and I like respect the sales pitch. Can we jump into the other neobanks in the region? Because what I'm trying to pinpoint is whether the growth is macro, where all neobanks as a phenomena have similar spectacular growth rates, in which case it becomes a discussion around the geographies, or whether there's a differentiating factor that Nu has that other neobanks don't have, in which case it becomes a conversation around Nu's value props.
So can one quick sec. Can I invite a guest?
Yeah.
Okay. I've invited a guest. Next, probably the biggest competition, or at least the one that I'm following the closest, is a company called Mercado Libre.
Oh,
right.
That's it sounds like a small company. I don't know.
Yeah, it's a tiny company. So that's about the largest technology company really in Latin America that's doing e-commerce and fintech. They have a product called Mercado Pago, which is sort of the fintech alternative to Mercado Libre. They are extremely successful there, but still not even close to Nubank, but they are doing very well. In terms of the company,
not even close, by what metric?
Just growth rates, customer acquisition costs, profitability, whenever you're actually comparing them. Whenever we're actually comparing them, it's still not quite close. Carlos, great to see you. I appreciate you coming on. I'm talking about a company called...
I like how you were like Mercado Libre, and they're like, let's bring the Spanish guy in. nice segue.
So that's exactly what we're talking about. We're talking about some Latin American companies. My favorite Latin American company out of all of them is Nubank. In fact, I think that this will be a very large stock for me as I continue to pour new money into this company as fast as I can get it practically. It's not exactly true. I'm buying Cash App as well. I'm buying PayPal. I'm buying a lot of fintechs right now, but
it's like
Nubank is definitely up there.
That's your niche, George.
Yeah, no, it is. And
don't hide them.
I don't think people are seeing what I'm seeing. By the way, let me just also say that this is a Warren Buffett stock as well, which, you know, he's not extremely fond of growth stocks. So whenever you're talking about one of the fastest growing stocks I have ever seen, it's incredible to know that Warren Buffett is buying this.
Well, it's also Warren Buffett's number one rule of investing is don't lose money. Rule number 2 is refer to rule number 1. So he really doesn't like losing money, which means he's got to have some real information there that the company is safe. We'll say.
How big is it relative to his other positions, though?
So he can only buy so much of the company.
Right.
Around whenever it was $40 billion, he bought $1 billion worth of that company. He led the IPO, he led the funding round for the IPO. Berkshire Hathaway did. So that being said, the stock actually, whenever he purchased it, was $41 billion. Today, it's about $37 billion. So he's actually down on it. Don't lose money, whatever. That was back in Q3 of 2021.
That's when he IPO'd?
Sorry?
That's when the IPO was?
Yes, correct. Yeah, he led the funding for it. So
wasn't he also in another bank that was in Latin America that just like lost 90% of its value or something?
Yeah, StoneCo.
There you go. That's it.
So he bought StoneCo. I'm not as favorable for StoneCo just because I've looked up their website traffic, these sorts of things. It's very hard to find articles or really any sort of social media following for Stone anywhere near what Nubank is doing. Nubank, like across the board, is like extremely powerful social company. People love this stock, and there's no other way of putting it. There's a Nubank Monopoly game that's selling out right now. Like, it's hard to find a love for a bank like this, and it's honestly because I do think they're liberating a lot of the population that is out there right now. There's like banks are extremely costly to fund in Latin America, and a lot of people are very spaced out. Like, sure, if you're near a city and you're a middle-class individual, you can get into a branch bank, but then that doesn't include the ability for, you know, if you're more rural, right?
So,
if you go ahead.
Can we just drill down one level into the comparison with Mercado in terms of like a head-to-head on the products that they compete in? Because Mercado, after like having done some digging on them, like they have an actual ecosystem.
They have an ecosystem on the e-commerce side. They don't really have an e-commerce system on the.
Still, like you can see complementary benefits with Mercado Pago, which Nubank can't really compete because they don't have an e-commerce side. So what does that landscape look like between? Because like traditional players, but I'm ruling them out, right? I'm just looking at the neo players, right?
Yeah. So that's the thing too, is like you can't rule them out because the massive amount of total addressable market is currently owned by large banks that have 5 to even 6, 7x the average revenue per user on the incumbent bank side. Okay. But let's look at Mercado Pago for a second. It's very much similar to comparing a SoFi to a Chime. Okay, you're talking about a company that has a full ecosystem versus a company that has a great banking and debit card. It's popular, but then, so I honestly think it'll be a duopoly between the two. So I'm not even bashing Mercado Pago. I'm really bashing the other alternatives that have tried to enter the market, and including SoFi. SoFi has said that they'll get into the Latin American space, and to be very honest, I think they'll leave very quickly. I don't think they'll have a case at all to join them. So a company called C Limited. You know this company?
Yeah.
They are a Southeast Asian company that has specialized in gaming, in shopping, and in fintech, right? Extremely exciting company, similar to Nubank, where they seemingly are getting into everything. Same with Mercado Pago or Mercado Libre. And then they said, okay, this growth is extremely exciting. Let's take C Money, which is their fintech side, and get into fintech. Okay, so they brought over their systems over there. And then they went, oh, wait, the marketing spend that we're putting in here, everything that we're doing, we're seeing no traction, and they pulled out and they left. And the truth is I do think that there is some sort of hard understanding for localized marketing that you can't just come in here and I don't think that the market is that ripe where people is just like a feeding frenzy or a gold rush. It's actually quite smart in the way Mercado Pago and Nubank are actually growing.
Right. There's a home field advantage, basically.
Absolutely.
But I think what he's speaking to, which I can attest to, is that there is a bit of a different way that you have to penetrate a country when you have a somewhat homogenized culture. Like I think we're kind of spoiled by that because say Canada and the US are just more diverse. It is a bit different. In general, it's harder to penetrate, and it's also harder to get people to abandon, say, companies or services once they use them. What's interesting about this is like I keep feeling like I'm meeting the same people. Like I have a friend of mine that I've known for years, and he reminds me so much of Chris Patel. Oh, so much. It's even the things that they invest in. And Tanner reminds me so much of this other guy who literally last week was pushing Mercado Libre and Nubank on me. So I was like, okay, you guys are like the same person. And he made a lot of the same points as you. He's big on this. He's big on this bank too, and this guy is also heavily into a lot of the regional banks. He's been making money at it. So,
are you in Nubank, Carlos?
Not a Nubank.
Do you have any opinion? Like, are you bullish, bearish, or neutral?
I've been hearing rumblings about it. I mean, I think we talked about this last time. I just can't be in everything. I'm a firm believer, and I think I even posted this on Twitter. The high net worth individuals that I've spoken to, they all say the same thing. There's some things in common. Very concentrated positions, super large share counts in 3 to 5 positions. And then from there, they start to diversify even more. And so I'm still trying to continue to build my 3 to 5 massive positions. I do dabble a little bit here and there. Like I just bought some PayPal calls and stuff because it just seems ridiculous not to. But yeah, if I had infinite money, I would. This would be something that I would plan. Just as of right now, no. But that's why I was curious to hear what Tanner had to say about it, because I'm also hearing these rumblings from other people. This is one of these stocks that just sort of you keep hearing whispers about. And so what did I miss? Was there any key data points that you gave on the company, like user growth, things like that, revenues, certain basic metrics on the company?
Yeah, so we can go through some of them right now. I have a spreadsheet that I track quite closely. I'll try to just bring it down to a few quick points. There's so many things that I want to cover. This might be a little longer than an hour, Tevis, if you don't mind, just because there's so much here.
That's fine. I want to cover, like, after we go through the numbers, I'd love for us if we can just carve out some time for the political landscape, because you're investing in Latin America as a geography, and number 2, the valuation, because you've mentioned in the past that they are richly valued, and I want
this is an expensive stock.
Okay,
it does seem, what'd you say, 40 billion right now?
Yeah. Don't mind the quarter over quarter growth. So I just took, and I can expand this if you guys need. For the most part, I just wanted to show this 2 year over year. I do have all the statistics in between. It's just, this might look a little bit harder to watch. What do you guys think?
I'm fine with either way, but if you just want to compare, you're basically comparing 2021 to 2022.
Well, from Q1 of 2021, I mean, I have all the quarters going even back to 2020. I do have these statistics as well. It just gets a lot.
Yeah.
So why don't I just close those away? We can look at them if we need to see the statistics, but for the most part, what I wanted to show you is just a couple of these highlights. So customers just in the last 2 years has went from 37 million to actually in April of 2023, it actually passed 80 million. I'm expecting just as great of results. Whenever we actually look at product counts, however, versus how many members that have joined, it's gone even faster. The amount of people that are cross-selling into this business are even getting higher. The activity rates per customer, the average active user is even getting higher and higher. Not to mention that the NPS scores for Nubank are world-renowned at nearly 90+% for every single product and metric that they have. Purchase volumes for how much people are actually putting through the business is up. The take rate hasn't shrunk. There's no margin compression for that growth. Although number of employees has skyrocketed, I'll actually show you that is actually going down. The company is actually firing people and cutting positions even during all this growth because they want to just get it that much more proficient. They are an actual bank. They do take on deposits, which are actually getting cheaper right now. By the way, the spreads are getting larger than it was 2 years ago.
What's the demographic of their customer base? Is it mostly individuals, or do they do like small businesses?
They have 80 million small or customers, 3 million small business banks or small business accounts.
Okay.
Yeah.
But it's mostly 80 million individuals. And do they give you information on the average age of those customers?
No, because I think for 80 million, the average age of Latin America and the countries that they're in is 31 years old. Okay. That's the median age. From everything that I've seen, it is a very young audience. This is a young audience first. It's a new style of sort of product. So I wanted to show this as well. These are all the products. Nubank, just in the last 2 years, this is their sort of their checking account, checking and savings, included with a debit card. Their credit card, which is actually what they started with, isn't actually growing as fast as their new accounts. Okay. They have an invest product. They have personal loans. They have small business accounts. So this right here is active accounts. That's how it differs from the 3 million. They count an active customer as someone who has given them revenue in the last 30 days. They have a crypto product. They have insurance policies. They're growing on every single field. Where I like this company even more, if you compare it to like the growth rates for their revenue, for example, I'm just going to expand it really quickly. There was one part, I think it was like here, Q3 of 2023, where SoFi also had the exact same amount of revenue during this time. Sorry. I think here, sorry, my bad. Net revenue, I was looking at gross profit. That SoFi around this time had similar revenue as Nubank. But since then, Nubank has exploded in terms of their overall revenue, and SoFi has kind of gone up like in that time, like where Nubank has gone from quarter to quarter.
What are they doing different that SoFi is not doing?
It'll be best summed up in these metrics right here. Customer acquisition cost for Nubank is the lowest worldwide of any fintech or anything along these lines. Let me go ahead and bring that back just so we can see a little bit closer. Sorry, where was I? Customer acquisition is the lowest of any bank ever. Okay. Although it says it's $1 here, this was sort of the outlier versus all of the other ones. They really do average $4. You can see here, where am I? Sorry. Where is it? Customer acquisition cost. Yeah. So it really does average out at around $4. They've even had as high as $12. That being said, average revenue per user is skyrocketing. Okay. This is per month. Okay. Whenever you actually do it out quarterly, I think it's like $20+ per person. SoFi does about $70 per person. So people think that, the GDP per capita versus US versus Latin America, people think that the business will be 1/14 the size because that's the difference in GDP. Whenever you actually look at how they're monetizing clients, the difference is shrinking extremely fast, extremely fast. This leads to them. Oh, and the cost to serve these clients, although they've went from being a 1 or 2 product business, now they're being a, full ecosystem, all on the cloud, by the way. All those products that Technisys is supposed to be promoting, Nubank has designed themselves, proprietary technology. Their cost to serve has not changed, even though becoming a holistic bank.
How do their defaults look?
Good question. I'll show that too. Servicing profit margins have been absolutely phenomenal, meaning how much does it cost them to bring on a client versus how much they make, how much they make or spend per month versus how much they bring on per month has just been going up like crazy. Where was it? Right here. They bring on almost 11x what they have to pay out. Their portfolio is growing. Now, this is where I'd like to show off their CECL reserves, their CET1 ratio. Not CECL, sorry, Basel. This is like their capital. If you look at SoFi, it's like 13%. Any sort of bank, like if you look at Ally or Truist, it's like 9%. The margin that Nubank keeps to cover any sort of errors like high default rates is, much higher. And you can see even here, these are their non-performing loans, 90+ days. 15 to 90 days, it is higher than SoFi's. It is. Like, we are dealing with a riskier audience, but it's not even nearly as bad as people would think it is.
They've been growing across the board.
Sorry?
They've been growing across the board for the last 2 years.
For non-performing loans, you mean?
Uh-huh.
Yes. Well, because of the interest rate environment that we're in. That's unlike every single bank in fintech is the same. So that's essentially the financials that I like to show. You can sort of see it from the interest incomes, from their credit cards, lending, whatever sort of breakdown that you guys want, I have. But what else? What other questions did you guys have? Let's pick apart what I said. What do we not like?
Well, I think Tevis was starting to get on there in terms of it's the political climate, and again, this comes back down to having, a homogenized culture. If they're with you, that's fine, but when they're against you, it's bad, and that's reflective of the amount of cash that they're keeping on hand for things like deposits, and also a reflection of the young age. But what I do like about that is the same thing that I do like about SoFi, where if you get these people when they're young and they have that established relationship with you, as they move through their life and try to make bigger and bigger purchases, you start to now have a generational company where you're already grandfathered in. Because what do you do when you're 31 years old, right? So average age is, say, 31 years old. Say in 5 or 6 years you have a kid. 10, 15 years from now, when you take that kid to open up their first bank account, where's it going to be? It's going to be at something like a Nubank, and that culture is very much that way. So
yeah, and the thing is, like, right now they don't offer mortgages. They don't offer.
Are they planning to?
Well, so here's the thing: is they've probably done the data and just realized that their audience is probably too young for that. And as the need for that product picks up, so will their offerings. But right now they've found a much higher need in personal loans, credit cards, and invest products, and sort of that smaller sort of product, I guess, the not so serious product, which doesn't mean that that's not a great business as well. Like the credit card business is one that's immaculate, and the default rates on Nubank's credit cards are like less than half of what SoFi's are. Okay, it's incredible how great this product is, and they service.
How many customers compared to how many customers compared to how many SoFi is servicing in terms of the credit card side?
Oh, like you're talking magnitudes higher. Credit cards for Nubank is 31.5 million. SoFi is about 200,000.
Mm-hmm. So Tanner, just on that political point as well, like, how does the banking license landscape change between Brazil versus Colombia versus Mexico versus potentially Argentina as well? Like, wouldn't that be a lot of different moving parts to consider for them?
Yeah. Like what do they lose in transfer fees yearly?
So
like that's
that
$600 million, just because in transferring the money, the value of the money in the currency locally.
I might be able to find something here in their expenses, either transactional expenses or something like this, but this makes up a very small. So whenever I'm looking at their gross profit margins, for example, so all of their total revenue that they're bringing in at the extreme rates that they're bringing on, minus all of the cost of revenues. You're talking about interest costs, transactional costs, and credit loan allowance expenses. Those are their three main, expenses to service what they're currently servicing for all of their products. You're talking about, like, right now, their gross profit margin of last quarter was 59.79%. You're talking about a 60% gross margin, guys. 60%. Carlos, just because I'm right on this point, and then I'll talk about the climate and the banking stuff. How much do you follow e-commerce, SaaS, any subscription services type style of companies? Like do you follow Netflix or Spotify or any of these?
Yeah, I mean, I've been invested in some of them in the past. So
sure. So one of the things that a lot of those e-commerce or SaaS companies will look at is lifetime value to customer acquisition cost ratios, LTV to CAC, right? Tevis, do you want to tell me what a great LTV to CAC would be?
I'm not sure.
You remember the what do you call that? Like rule of thumb is for that?
I have no idea.
You're
About
saying their lifetime revenue versus the lifetime revenue compared to the acquisition, the cost of acquiring that customer over the lifetime of
so
that
essentially
relationship.
taking the churn rate and assuming how long it would take for the customer to churn out, and then how much you would pay on a per month or annual basis. So how much that lifetime value of that customer would be before the cohort of customers churns out versus how much you took to acquire them, right? SaaS, e-commerce, everything like this, the rule of thumb is like an A+ performance is anywhere between 3 to 5x. Okay.
Yeah, but with that cost of acquisition so low, at $4.
Yeah.
I mean, I was looking it up. SoFi is $305. $305 to
You're
get
looking at more like
customer.
$350.
Say okay, but say even at 300, I mean that's
So,
a fuck ton of money you got to spend to get that customer.
so let's say SoFi spends $300 to get a customer.
Yeah.
What you're saying is, in order for that to be a good ratio, they need to make at least $1,000 on that customer.
No, if it's $300, he's saying they need to.
Yeah.
You need to make 5 times that. You need to make.
Yeah, 3 to 5,
Yeah,
right?
yeah, so-
900 to
Yeah.
1,500.
Yeah, essentially. Now, banking, I'm also spiking the numbers because banking is usually higher. The churn rate comparatively to the other businesses is much lower. People stick with their businesses longer.
Like, how do you even have that as a reasonable metric for a company that has a customer acquisition cost of like $4? Well, you need to make like $15 off them.
Well, exactly. Yeah, but
that's what he's saying.
But that
That's
is the
point.
business.
What
how
he's
is that
saying is
unfair?
basically he's saying that they're getting these customers cost them nothing to make.
Right.
And so they after they make say they make $12 off this customer, they've already beaten the industry average, right?
Yeah.
And then everything else is like cream.
So the assumption is that because they have a low customer acquisition cost, that they're going to have a really low style of client. That's just not true. 90%, 80 to 90% of the people that come on this platform are unpaid referrals. That's why the customer acquisition cost is so low. It's and Cash App is the same way. It's not that they couldn't, acquire customers for large referral fees. You see this stuff like SoFi, refer your friend, you guys both get $75. You do direct deposit, you get another $250. You do that on Cash App and they'll offer you nothing. Do direct deposit if you want, bring on your friends if you want. Maybe we'll send you $5 for each of your friends. Just the style of acquisition is completely different.
So
Go ahead.
sorry, let's stick on that for a second, right? Why is it so that 90% is, this like no referral, basically zero?
You're gonna hate what I say.
Because there's no competitors, or
It's a cool factor. This is similar to Cash App. This is what the kids are doing these days. It's true.
If you told me the kids are fine, but the kids don't deposit lots of money. Who you need are the independent contractors. Those are the guys that drive, because also money moves a lot, right?
But that's the thing. With 80 million users, it's not that you need a certain style of customer. You need you have a relationship with 46% of Brazil. 46. It's not a certain style of person that we need. They want everyone.
So you're saying 46%? They have 46% penetration in Brazil
Of the adult population in Brazil, yes.
Of the adult population. And what do they have of say Colombia? That's what my wife's from.
Less than 1%.
Less than 1% in Colombia. Okay.
Yeah.
And then what about like Argentina?
They're not in Argentina. They're in Mexico, Colombia, and Brazil. Mexico is about 3%, but they just got the banking licenses required in Mexico and Colombia. And Colombia is actually next. They don't have the banking licenses needed, but they just got it in Mexico in May. Okay. Actually, it was a little bit before, but they launched the products in May. And they already, in the first month, this is what you missed, Carlos, that they gained 1 million new customers in a single month. And they said bi-weekly, the deposits grew more than 30% from the first 2 weeks to the second 2 weeks. Like you're breaking this company not down by quarters. They're breaking it down bi-weekly.
Yeah, bi-weekly, right.
They are Okay, so wait. I want to go back to this LTV to CAC because we were talking about that and I didn't even get to share. I'll share my screen real quick. I am spiking the numbers, but what we're seeing here is unbelievable. You're talking about a monthly churn rate that is unseen even across banks. This monthly churn rate right here would equal a lifetime customer, or a customer lifetime of about 46 and a half years. 46 and a half years.
For other companies, you're saying? For
No. For this for if monthly this many people left the platform, it would take about 550 months for the current set of clients to completely churn off the platform.
Right.
That's the math there. At $6.82 a month, because I'm not factoring in active customers, I'm factoring in everyone, at a 60% margin, okay, which some people don't even use. Some people just take the revenue, but I factored in that we're only making 60% here. That means that the customer lifetime value, oh, and by the way, the churn rate, I took the most conservative estimate that I could possibly find. I found ones at 0.06. I found some at 0.13. Okay, I took the most conservative one that I could find, and it came up as an LTV to CAC of 500 and nearly 30 times.
Okay, so the question is, how are they acquiring these customers? What are they spending the $4 on to acquire these customers?
Yeah, like cloud payments. What
do you mean?
What I mean is they're not
are they doing TikTok videos? Are they just doing a TikTok video that costs them nothing to make and it's going viral and they're getting, 1 million signups or something like that?
You're talking about like normal operational cost, They're that low. They are the lowest acquisition cost in the entire world for banking. So
here's the thing. You mentioned that they get a lot of customers from referrals, right? So how do you know that they haven't saturated that is what I'm saying.
Well, I don't know that. I'm assuming they haven't because the growth has been, we're at 80 million already. It hasn't shown a sign of slowing down.
Well, but is that factored into the customer acquisition cost? So in other words, for example, if I acquire one customer, I acquire Tevis, but then he brings in 5 other people. Am I distributing the cost of acquiring him across the 5 people that he brought in because they're free? Or is this only the customers that they know were acquired through their direct action?
No, I think customer acquisition cost, as far as I know, is a much more simplistic cost than that. It's sales and marketing expense divided by new customer count.
By the new customers. Okay.
It's just, I don't know, man. Like the numbers are fantastic. There's no doubt about that. But
back to the government.
Well, yeah, I want to talk about that and the valuation as well. It just honestly, like they seem like really too good to be true, and it makes me skeptical, especially given the just, I don't know, bias. But I would argue that a company to be listed on the U.S. stock exchange has to go through more hoops, regulatory speaking, than I don't know. It just seems as though like too good to be true. You know what I'm saying?
Absolutely.
Can I share this while we talk about it for a second? And again, I'm just like doing literally like a cold reading. It's like a psychic. I'm just looking at the stock price now. Okay. Because I think eventually with everything you're saying, like you've shown great metrics for a company that has been doing gangbusters but when you have to look at the valuation saying this is the point where we're entering now, are we going to have the same potential benefit? When look at this chart, they IPO'd when? They IPO'd in December 2021, and they were at, what is that, $12? Somewhere around there?
It was about $11. There's been some stock-based compensation. So essentially that was 41 to 50. I think they got as high as $50 billion. It ran up 15% on IPO.
Okay.
Today it's as low as 37 billion. I don't like to look at stock price. I like to look at market cap just because it factors in the shares outstanding as well. So we essentially went from IPO 41 billion to now it's 37 billion. And yet during that time, we went from 48 million customers to 79 million customers. We went from 480 million in revenue to 1.6 billion.
Mm-hmm.
You know what I mean? And like we went from being negative 21 million in net income to just this quarter alone, $142 million in net income. This is a profitable company, by the way.
Yeah. So basically the takeaway that I have here is that they're moving more in correlation with how the U.S. market moved as a result of 2022, and less so to the fundamental. Like it's trading in a basket with U.S. bank stocks, let's say, and regardless of how well,
so it was like valuation and sentiment.
Yeah.
Even there was a little bit of underperformance where you see that large drop there where I don't know if you can like yes, there where your mouse was
here.
No, over. Sorry,
in April.
Oh, here.
Yeah, I can't see that close. Yeah, that large drop. There was actually a little bit of underperformance in Nubank's case, but the thing is that it's not that they were actually underperforming. It's just underperforming Wall Street estimates because the growth rates are expected to be so high. It's like Tesla, for example. Did Tesla have a bad quarter in terms of a company? No. Did it have a bad quarter in terms of the extremely high estimates? Yes. And so, like, that was sort of the problem. But ever since then, we've just continued to wring it out, and it's been higher and higher interest rates, which means profitability's been higher. But if you guys are following any sort of bank stock right now, it's falling into the same pattern. Net interest incomes are much higher than people are expecting, and they're printing cash. Okay. And now, so I said a lot of things there. I said a lot of things that I'd love to cover on management. Okay. I said stock-based compensation. Can we stop sharing this, by the way? Because I'm getting distracted.
Well, before we do, I just want to actually just tell you what I'm looking at.
Okay.
This is what I'm looking at. I'm looking at a company that's right now sitting 32% off of its IPO price, which is basically its all-time high. I'm seeing a long period here. Hold on, if I can just say this. I'm seeing a long period here. After this initial dump, I'm seeing a long period here of accumulation, something like 320. So you got about a year or so that people were accumulating these stocks within these levels. Okay, and now we've had a massive run up. And if you just come here to what's happened recently, so this is a trend line that we're looking at here, but it's sitting above the 21, above the 50, above basically all of its moving averages. Everything here is telling you that most likely this has to have a correction, simply because it's run up way too high, way too fast. But it's also run up after a relatively long period of accumulation at this levels. So again, cold reading the stock and hearing what you've said, my instinct tells me that what the stock price will do, and again, it's different from what the company will do. My instinct tells me that at some point we need to come back and we need to retest at these levels. We need to confirm that this level here at $5 is an actual level of support.
And honestly,
before it can take off, simply because we hit this point here. It was a level of support, but this is as it was falling. People bought it back up and then it tanked. So that tells me that everybody that was, an investor in this thing early on sold their shares, dumped it on the market, and then it had its natural accumulation. And like you said, they've been growing like gangbusters. And now we reached a point where we're here. How many days ago was this? This was April. So April of this year to now. So from April of this year to now, we've grown 115% since April in 134 days. That's a lot of growth. That's a lot of return that has been generated. Now, it doesn't seem like there has been a massive sell-off, but you can see here it touched this level here, which is like where we were looking at. Hold on, here somewhere. It's more like here. It's more like here. So we basically touched like the top of the top here at $8.33. Looks like it touched it and was rejected there. So that seemed to be like a
why
hard
I don't
wall
like
of
technical
resistance.
analysis.
And now it's trying to see if it can push higher. I'm not saying it can't, but what I'm saying is having run up that much so quickly, being above those moving averages in such a short period of time, me personally, I think it has to come back down and retest some other level before it can go higher. Because we're looking at, you're saying it's going to run up. If it runs up another 30%, it's literally at an all-time high, less than 2 years after IPOing. That's a lot to ask for a stock. If you were accumulating somewhere in here, you were doing, all these people are doing really well,
That's where I was buying my babies.
Well, if you're buying, so then you're sitting on 115% return and you're not taking profits?
No. This company will fuel my retirement.
Okay.
This will be, and I'm not joking, this will be the largest bank in Latin America. This company will fight with the JP Morgans for world domination.
I don't disagree with you, because I feel like a lot of the banking sector is due for some sort of disruption. And again, knowing that market, like you said, because it's a homogenized culture. If you grab, for example, if SoFi grabs a certain demographic in America, now go to that home country and you grab the whole country. Do you know what I'm saying? Whereas in here in America, it's a much different sort of variety, a suite of products that you have to offer to have a little bit of something for everyone. You really only need to hit certain things in one country and do it right. And like you said, if a lot of their stuff is local and it feels like a local bank, it seems to me like this bank is like the Capital One, or like the Orange Bank, ING.
Can we stick on Capital One for a sec?
Yeah.
Okay, I just really want to say really quickly, the management is a bunch of Capital One geeks and tech nerds. So this was
From
the whole idea of
the Capital One 360 crew,
sorry,
the Capital One 360 crew that bought ING.
I'm not
ING
sure.
Bank?
I'm not sure. All I know is that a good portion of management has Capital One backgrounds, and the whole idea was to bring the sort of Capital One credit card idea of giving credit cards to people that necessarily didn't have a credit exposure previously and testing them with small credit limits was exactly the same playbook that Nubank created. Okay.
Well, listen, if they're from that Capital One pedigree, like even me, I was this customer at that age when ING came out, and they were really simple. They had it was no brick and mortar. It was really simple. They just offered a really good rate on savings rate, and they had some other products at the time. It was like you said, maybe you had a credit card, and they would give you a credit card attached and your debit card, and it was great. And a lot of people switched over to it. Then they got bought out by Capital One, and then I don't know who bought them out or what happened since then. So is there a risk of acquisition? Is there a risk that they will get bought out?
I mean, is that a risk?
By one of the bigger players? Well, it depends on the valuation that they get bought out at. But like if they got bought out now for $40 billion, because if there's another if there's another bank in there that's worried that these guys are going to come up, that's what they're going to do. They're just going to buy them.
Well, so
and that might be their play.
Yeah. So even in terms of like the size of company that Nubank is, like even against the largest banks, they're a top 5 bank there now. Like they have scaled the masses in the last couple of years. They're so large now. And so, sure, buy them out. But at the growth rates that they're growing at 100+ % in terms of gross profits. Their compounded annual growth rates for their gross profits over the last 2 years is 5.6 times. Okay. So customers, same thing. Revenue, 6.6 times. What valuation would you even allow them to be bought out at? 200 billion? Go ahead, buy me out. I'll buy more SoFi. But
I still, I don't know, maybe I'm just.
Yeah, let's talk. I haven't had time to talk about political risks and management. So that's why I want.
We'll get there, but okay. I still haven't wrapped my head around what makes them special. Like, what is stopping? And I get the cool factor, I get the marketing, but those are not real answers. Like, what is stopping one of the well-funded traditional? What is stopping? I don't know, like Bank of Brazil, BBVA, one of these big Latin American banks from putting $5 million to a branding agency, spinning up a whole new instance and opening their own neobank that's powered by an app. Because in that
sense, I have to agree with Tanner that there is an intangible factor. Like there's other people that could have made, say, I don't know,
an electric car.
Yeah, like whatever it is. Like some people could have made like wireless headphones. People had them, but Apple knew how to make them cool. And then once they're cool, now they can charge. Like someone took apart the Beats headphones. There's like $8 worth of parts in there. They're not actually great headphones, but they just know how to market it to that audience, and that becomes the one that they want. And that can't be understated either, because, and I'm going back to my own experience with Capital One. All the other banks at the time, it was like Republic Bank and Chase. They all had the same thing, but it just didn't seem like it was for me as like a young guy. But ING, from their marketing, the simplicity of the website, even something like Robinhood doesn't offer anything different than like E-Trade, but the way the interface looks, it feels more like what I'm used to seeing. My mom and dad probably would think that it looks too simple, but for me, I'm like, wow, this looks really approachable, right? So that was my next question. Do you have pictures of like the UI of their app, and are most of their users mobile or desktop?
All like 99% mobile. It's all mobile because that's what's cheap there.
Carlos, like, it's really interesting that you made the comparison with Robinhood, because literally on Friday, Tanner was the one arguing Robinhood's UI is not a real moat. And so I'm just bringing up the same argument with Nubank. We're not talking about today or tomorrow or next month. We're talking about 1, 2, 3, 5 years from now.
Yeah. Well, I think the difference
is arguing that Robinhood's UI is not a moat.
Let's not fall into this Robinhood.
No, I'm just trying to ask if
that's my case. I don't think a UI is a moat. Okay.
Over the long tail.
Sorry?
Over the long tail.
Sure. I don't want to get into it very long, but Robinhood has shown that they can go from 23 million users, growth going like crazy, to less than 10 million monthly active users. Why did those 13 million people not decide that the UI was important whenever they dropped off the platform? So I think UI can be I'm not saying UI can't be a moat. I'm saying it's not in Robinhood's case. It's too copyable. I think maybe Apple's ecosystem and their UI can be a moat. Their ecosystem could be a moat. But that's also the thing too, is that Nubank here is a full ecosystem. They offer every single product. They did it in less time than Robinhood had. They're expanding and offering more than any other. Like the truth is too, why can't another company do what Nubank's done? There has not been a single company in the world in finance that is growing the way Nubank has. There's not been a single one. PayPal did not grow this fast during their growth years. This is insane.
Can you pull up like Nubank's Instagram?
Yeah, they have 2.7 million followers on Instagram.
I just want to see what they're posting. Let's see what reels they're posting.
It's like it's going to look very similar to Cash App. It's like girls holding cards and
oh, well, then there it is. That's it. That's a secret of success.
Yeah,
that's it.
They work with the celebrities down there.
But that's part of the Apple playbook. That's part of what they do. They make it to where you just want it. The other thing is, if you're going after that market, is it as easy to pay someone like from Nubank to another bank as it is Nubank to Nubank?
I'm not quite sure.
When kids want to pay each other, right? Kids want to throw some money down for whatever it is, like, instead of like Venmo or something, if they can just transfer. Like if I know someone has Bank of America, I'm going to use Zelle versus Venmo. I'm going to.
So,
and if all my friends are on it, right, or Cash App, whatever it is, you're going to use that.
They do have a product down there called NuPay, which is sort of the payments,
Venmo,
person to person and commerce payments, similar to a Shop Pay, which is like becoming the Latin American exclusive down there. Like they just partnered with large brands like eBanks, for example, which does all the payment connections for Meta and TikTok and all of these massive brands, and just allowing that cohort of customers that they have that are in Latin America to now choose NuPay as a selection. And obviously they're all going to select it.
So can we see the Instagram and their TikTok?
Yep. It's going to be a slow show if I slowly pull it up. This is not my selling feature. I don't care too much about this kind of stuff, but they have, the last I saw, I think they have 10 million people across all of their different platforms. And it's just stuff like this. It's a lot of girls.
Can you play any of it?
No, I can't. I guess
I can understand what they're saying. So I'm just curious what their actual message.
I can't. I can't sign in right now. I don't have Instagram on my computer, but that's much smaller of a case for me than let me talk about management, SBC, and then regulations. Okay. Management. This company was founded by a guy named David Velez. Okay.
Mm-hmm.
He started it because he tried to actually get a bank tried to set up a bank account over the phone in Brazil while he was visiting there and just simply couldn't. They wanted him to come in. They wanted all this documentation. They wanted him to pay all of this crazy information.
Legacy.
They said, sorry?
Legacy. The legacy way.
And so they wanted him to have a credit history. He didn't have that either. So they designed this credit card. Three co-founders, they decided to make this credit card that would, very similar to SoFi or Upstart, create their own style of transaction history and offer credit where the people that they were going after were unbanked and had no credit history. So they would offer you like credit limits, like $40 US, okay? 200 real, and go, hey, pay this back. And what they realized is they saw some losses on the first month, but then the people that paid back always paid back. And so what they realized, there's a lot of people that had no good credit scores that were actually very trustworthy people. And yeah, 20% of them in the first month were not. But over the long term, those people became very profitable people.
Yeah, yeah.
And it exploded. And then they got into a second product, their new accounts, that exploded even faster than their first credit card product, which is like, if you look up the amount of companies that have that and then which names those are, where they create a second product that was more successful than their first, you're looking at some of the largest companies in the world have this. SoFi has it as well. Just to be clear, the SoFi Money accounts is more famous than their student loans that they started with.
And what was their net revenue last year?
Well, I don't know what it was for the trailing 12 months. Last quarter it was 1.6 billion, 1.62 billion.
Okay, 1.6. And like the quarter before, can you bring that up again?
Yeah.
So they're so in terms of their net revenue, their market cap is like 40 times their net revenue right now.
Yeah, but there's been quarters, like if you look at their revenue slowing down right now.
Mm-hmm.
I'll show you here though. But whenever I say slowing down, I mean much faster than SoFi or any of the other banks that we look at.
Like
revenue quarter over quarter. There's been some quarters that have grown 43% quarter over quarter, 32% quarter over quarter, 38%, 32%, 13%, 11%, 11.5%.
Right, but to be fair, okay, so you say so for 20%, sorry, 37% more growth from the previous quarter and 43% of the previous quarter, then 32% of that previous quarter. It's harder to continue to have 40-50% as you start having that level of growth, but it's still great growth. And so now you're saying that they've trickled down to about 12, 10, 11, 12%.
Yep.
Quarter over quarter.
I'm sorry about that. Yeah, it's quite exciting. Now they're getting into things like insurance policies a lot right now. Small business wants to be a big part. Personal loans, they've said like they're really, really about to ramp this one up. It's just about getting the risk right.
What are they guiding for end of year 2023, roughly?
I don't know. I don't even know if they do post guide because that's not something I feel like I would remember that, and I don't have a recollection. I think they're one of those companies that don't post guide. I'll check though.
Okay, like let's just say 1.6. What is that, like 5 annualized, 6 annualized? That's what, like an 8 price to sales, 9 price to sales?
Yep. Yeah. Well, actually, I think it's higher than that. I think it's like a 10 or 11 times right now. Price to sales. That's why I say it's not an expensive stock. This is not for the faint of heart. This is one of those companies where like you give it a premium because they're executing. And you give it a large premium. Honestly, I'm taking the Warren Buffett playbook here of like, I'm buying a exceptional company at a fair valuation. I'm buying this company anything below $11. That's what I'm reading right now.
Okay. And what do they offer? A dividend?
Nope. You know what's so funny? This is what I'm talking about with management. Let's go back to David. Whenever he spoke about this company, he said a couple things. He said, one, whenever they did go through their rut back in April or whatever, he had a $375 million compensation package, like a awards package. He cut it off completely. The whole thing, $375 million gone. Okay, way before Vlad Tenev did this crap or whatever and he didn't even cut the whole thing. He kept some for himself. Anyway, regardless. David cut his entire thing. He's full on focused for the future of this company. He's an ex Sequoia Capital person. Before that, he was a mixture of Goldman Sachs and Morgan Stanley through banking and risk. So this dude is exactly who you want at the helm. In the last three quarters, they've broke profitability. 8 million, 52 million, $142 million. That was the last 3 quarters of net income. He said, do not expect this going forward. Okay. This will be like Amazon, and we are going to put every dollar towards future growth. And that's our only objective. We're not looking to print a dividend. We're not looking to get buybacks. This is a growth company. This is a tech company. This is not like traditional banking. They are going for everything. That's why I say this is the future of global finance, because they want it all, baby. All of it. And I'm just a total believer that they're going to get there.
Okay. I ran I just ran some stuff through Chat GPT while we were talking. You said I
saw how many laptops you have. How many computers are you surrounded?
Oh no! What's funny is that this laptop of mine died yesterday. It literally just died. So I had to run out, and I just got a MacBook Air, and I'm doing the transfer from that one to this one. I think it's done. Yeah, I just got it.
Got it. And the iPad there is just to monitor all the.
That iPad used to be my wife's computer, but now she doesn't use it, and so I use that just to monitor the security cameras to see my kid. So yeah, but I still have this one, and then I have the iMac Pro over there, as you could see.
Oh my God, this room is so much bigger than I imagined it to be.
Oh, this this was a garage, and I transformed it into a home studio.
Got you. Just the way I thought it was like this thin room that went quite
It's
long.
got a couch. I mean, I've spent more nights there than I can than I can remember.
Nice.
When you're working. Yeah. Okay. So I ran some numbers, and okay, so you were saying the median age is 31 of their customer, right?
Well, of the country, which is essentially their customer base. So
essentially
yeah.
their customer. All right. So Latin America has 665 million people total, and the breakdown of population is 23% of the population is between 0 and 14. So that means that they're not even 25% of the population is not even available to them
right now. Of course, they're going to get into
right later. Yeah, but
like
I'm saying but I'm saying like later, 9% of the population is 65 and over, which leaves 67% of the population is in that sweet spot of, you could say that their customers, which means that you could say that they have about 448 million people available in the current pool right now that they could. How many total customers do they have right now?
80.
Yeah, 80
million?
81, 82.
81, 82 million. Okay, so there's
just because they were at 80 million in April, and that excludes them talking about in a single month they got 1 million new customers, but we don't know what percent is cross sold and what percent is.
Well, even to Carlos's point, 80 million across like what, let's say 450 million total.
450 million. Yeah.
They're only in 3 countries in Latin America: Brazil, Mexico, and
to be fair, it's the 3 largest.
In Mexico, they're at 3%, and in Colombia, they're at 2%. Hardly can call that penetrated.
Right. Yeah. Right. But Tanner's point is that a large percentage of those people are Brazilians. Let's be honest. I mean, that's most of people. Brazil and Argentina is going to be a majority of those people. And look, it's not to say that they can't grow. I think, if you've even been reading the chat, I think this would have been a great company to find or to have this stock tank when it was $5. I think if it's $5, I would have on the call. I'd be buying fucking call options right now. But it's a $40 billion company that is sitting 30% away from its IPO, which is also its all-time high. Okay, and it's sitting above all of the moving averages. I'm like, I don't know how much room there is left for me. You know what I'm saying?
I guess you guys aren't dreamers, because I think there's a long ways to go. This will be hundreds of billions.
Well, it's not that the thing is, it's not to say that you're wrong about that, but I'm saying, do I buy right now? I would probably, just by even looking at the technicals, I think this does need some sort of healthy pullback to show that whatever that $5 or $6 level that we talked about, that was a point of resistance, is now a support level, that those people that have been accumulating over the last year or so are not going anywhere. What about things like short interest? Is there anyone shorting this company right now?
No.
So can we just touch on this? Because
I've been meaning to do this.
What we just established is super heavy concentration in Brazil from how their customers break down. Brazil just had an election that really changed the political landscape. Are we seeing some risk there?
No, I'm more positive on Brazil than any of their other. I'd be more worried about Mexico and Colombia. So Brazil has honestly been trying to change. They want to be the financial hub for South America for all things finance. They want to own the stock markets. They want to own the payment systems. FedNow, for example, here in Canada, or here in America, already exists in South America. It's called PIX, P-I-X. Real-time payments. Nubank. So before they actually got into their new accounts, was getting slandered by all the largest banks, saying you cannot allow them to play this game. You cannot allow them to be a real bank. Can't allow them to get their licenses. There was massive political lobbying to stop Nubank. And then Nubank went, okay, you know what? We're going to be the government's best friend. We're going to push all their products. We're going to push PIX. We're going to do everything that they want. And they are like this with the Brazilian government. They're crazy tight. And the truth is that at least the way that I think about it, Brazil wants Nu to succeed. They want to be a hub where this amazing financial technology is available in Brazil. They want to be that new sort of place. I find it's not financially liberated, but it's a lot better than people think. A lot better. It's Mexico and Colombia where I'm still quite gray on. Not a lot of reading or findings there as nearly as much. But
Well,
Brazil,
I think
I'm
that
steady on.
Tevis's point is like, and I just know this even from being from that of that descent, and my wife, those countries are a lot more overtly corrupt than even we see here. I mean, we think that the American government is corrupt, and it is, but it's on another level. But the thing is it necessarily going to affect? Like, are they necessarily going to have legislation to try to stop this bank? I don't think so. But as with anything, when you get tumultuous times, if people feel like they need cash, because that's another thing that concerns me, is the devaluation of the currency in those regions. You've seen it skyrocket in some of these places, and then what do people do? They put the shit under the mattress. They don't want in the banks anymore.
But that's why we're not going in. Like Argentina saw some political risks. There was some corruption issues. We didn't go in there. They were supposed to, actually, and they didn't. There was a lot of inflation in places like Argentina, Venezuela. You didn't quite see that in Brazil, and that's the truth. It's like, I'm pretty sure it's lower than America's even now, and it definitely was whenever it was like 6%. Brazil had like 4.5% at the time. So I think they honestly had some foreign exchange benefits in that case. But
okay, so then you as the bull, what concerns you about your investment? Like, what stops you from going 100% all into Nubank? What would be the bear case?
I do think the things that you guys are pointing out, I think the political issues and valuation, but that's why I'm not going all in. But I do think that they're small enough where I can take an outsized risk, right? Yeah, I still like the company, but it doesn't mean that I don't like other things too. I like a little bit of diversification. I think I sleep better at night knowing that I have PayPal, SoFi, and Nubank.
Right.
And I think that there's room for all three.
Well, look, honestly, I don't disagree with you. I mean, the numbers do look really good, and that is a good place to. Latin America is a good place to have those numbers. I think those political headwinds or those political concerns are real, but for me, it's really just the valuation. It's not saying that the company is not going to continue to grow, but I'm saying for me as an investor, if I were to look at this company and I wanted to buy, I would still be waiting for some sort of a pullback. And it could be one of those, geopolitical events. It could be something that happens in the United States where it threatens trade with those countries. It could be something that happens in China. Whatever it is, that would be what I would be looking for.
I don't care about BRICS at all. I don't look into it at all. I think it's like, I'm not trying to say that it's fake, but it's a bunch of garbage nonsense. Anyway, what's called? So I wanted to talk about ownership really quick. Ownership for this stock, at least what I'm reading on Yahoo Finance right now, insiders hold 9.2%. Insiders are not selling. Institutions hold about 67% of the overall company. Less than 2% is short, which is essentially no one is short. If it's under 2%, that's a nothing.
Yeah. Those are hedges. Honestly.
Yeah, sure.
Those are just hedges.
Like, whenever this company actually did IPO, you talk about political risks and who is actually in these conferences to find out what are the political risks, and actually sitting down with the governments and sitting down with the investors here, or with management. The biggest companies in the world are betting on this company. You're like, and I know whenever I say Berkshire Hathaway, it's almost like to Tevis, like, this is not a big deal. The biggest capital allocator in the world being a part of your small fintech as a growth company is a big deal.
I mean, no, it is a big deal.
Don't get me wrong. Like, Warren Buffett is great, but he's not without fault. Like, the reason I brought up the StoneCo example was like, hey, he also invested in StoneCo and it's lost 90% of it. Like, he's not Jesus. Like,
he's not selling StoneCo.
Sure, but my point is that it doesn't make him right on every trade just because he's a great investor.
No, I agree. But it is an added benefit.
And I think Tanner's also making the argument that it somewhat legitimizes the stock because they don't buy companies they don't research. Although Warren has said
political risks.
Warren has said that he doesn't really do too much calculation. He's like, how much money are they making? How much, he's got like a very simple sort of formula that
the
he
truth
used
is
to
he
like
probably
value
didn't buy this
Coca-Cola.
either.
You know what I mean?
He didn't buy this company either. This is, I think, lower level management. just because of the size of the trade. But that being said, I mean, they did buy a large portion, but in terms of the overall Berkshire wealth, this is a small trade. It's $1 billion that they bought. So, but that's just
their
Berkshire.
platform? Are people using their platform? Or is because Mercado Libre has shown some massive growth too, and that's another company that is growing like gangbusters. Is Nubank being used as like the payment processors for companies like that? Basically,
I think what you're trying to say is like, are they also getting into e-commerce and stuff like this through checkout? Is that what you're saying?
Are they at all taking a piece of what's happening now?
Yeah, well, I mean, look at their purchase volume through NewPay. They do have sort of a Nubank commerce section on their app where people shop through. But
is there like pay with Nubank button, on the websites? Okay.
Yeah.
It's like a PayPal. Then you can just pay.
Correct. Yeah. Just a NewPay logo that's becoming very popular. Very, very popular. Uber just came out with a one-click checkout. There was a bunch of these sort of high-flying tech companies that have come out saying, we're integrating NewPay for our Latin American choices. Yeah.
I think like if this was 2020 or 2021 and I was just looking at the growth, like this would be a no-brainer. But the thing is that looking at it now, it's not in a vacuum. Right? There's so many names that have been completely beat up that you can just find like way more better ROI today than you could have found 2 years ago.
I honestly, I disagree, man. Look at the customer acquisition costs to their average revenue per user still to this day. And then you look at, they have already expressed interest that they want to get into Hispanic markets in America, all of Latin America, and even going intercontinental. I guess you could say that with North to South America, but still.
But it depends on the time frame, though, Tanner. Like I'm just saying, from a valuation perspective, like you're better off putting, and like to your earlier points, like you're better off putting just all your money over the next 24 months in PayPal because of how beat up it's been.
I don't time the market.
To just revert to the mean. I'm saying, right? But no, I know you don't time the market, but I'm just saying it. Your decision.
You're talking about if you want your money to grow. You're saying
Right.
If you want your money to grow, putting your money into PayPal, considering how much it's beaten up, is probably the safer bet over the next 12 to 18 months.
Yeah, but that's the way you guys invest. Honestly, listen to the Warren Buffett quote. If you're not willing to invest for it for 10 years, don't invest for it for 10 minutes. Like, I'm a big believer. I'm trying to pick out the companies that are the winners of not tomorrow, I mean of the next decade. The channel's called Future Investing. I'm trying to envision the future here, like truly. And I know that sounds cliche, but that's truly what I try to do. I try to pick in the winners, the next Amazons here. And in my opinion, I think I'm honestly quite good at that. I've been wrong, and maybe I'm treating a public market more like a VC.
How long have you been investing? How long is your entire investing career?
7 years.
Okay, all right.
A little over 7 years.
Getting up there. I think you got to hit those 10 years. You got to hit those 10 years. You got to be invested. You know why? Because you hit those 10 years, and that's when you see two massive corrections. You got to go through two of those to be like, okay, you know what I mean? I think I just went through my third. I kind of started it before, if you count like the .com boom. That's when I was kind of dabbling around. So I've been through my fourth, and you start to like learn stuff about them, and you just get like that sort of thick skin. But you're getting there. 7 years, long time.
2018 was a little bit of a rough patch at the end. December 2018 was my rough patch.
Yeah, but dude, 2008.
COVID was a rough patch, and then 2022 was a rough patch.
Like I was buying my first shares in like 99. I was buying my first shares like, this is going to the moon.
Yeah.
And then, you know what I mean? So you go through enough of those and you go, shit, man.
So that expressed interest that they're going to go global, that they have this ability to be so unbelievably profitable. The fact that whenever you look at total addressable markets for finance, people think that everyone banks. Like it's like something like 75% of the world is unbanked. Okay, it's crazy. It's crazy how much there is to grow here for a company. Like for the longest time, it's always been branch banking. Okay, where people have to go in. Well, what happens to all the people that are countryside who are not living near cities, who could not afford to go live in branches or near branches and branches wouldn't go to you because it wouldn't be cost effective. Now we're finding this echelon of digital banking that is going to reach people that have never ever had a relationship with banks before. And then there's a term called underbanked, right? Which is actually what I think the 75% falls under. It's underbanked and unbanked. Underbanked means that they've really not touched a credit product. Okay, they've stored their money somewhere online, but they've never touched a credit product. Now you're talking about credit going global here. Fintech is so like, people brush it off as being this small movement or there's a lot of players. Sure, there's a lot of players. Okay. No one, not one, has done it better than Nubank. And no one wants to bet on it because it might be a little bit more than what it was, since it's or near. It's not even what it was at its IPO. When JP Morgan, when Morgan Stanley, when Bailey Gifford, when Berkshire Hathaway, when all of these companies, there wasn't a name that you could find that wasn't on that IPO list. They all invest, from SoftBank to Berkshire Hathaway. When SoftBank and Berkshire Hathaway are on the same deal sheet, you know something's going on. Okay. And then the idea that the company has like more than tripled in terms of their operations, but their price is cheaper than what those guys have purchased at. And you go, I don't know, maybe it should be a little bit lower. F that, guys. This is a cheap, like, it's not cheap, but it's fair. And I will buy this fair stock to buy a future of finance.
Netflix signed up what was like 5.4 million new customers, but a lot of those customers were in India. And so the reason why the market didn't care about that is because the average price of that subscriber is relatively nothing. So signing up a bunch of people that have 10 American dollars in their bank account is not, it's great. It's great as a number, as a metric, and it's something that you definitely put out there, but how much money are you actually making from these people? And then there's also, in terms of markets now, markets are looking at those people as high risk customers. You also have we're in an inflationary environment, right, with a lot of turmoil around the world, a lot of migrants moving all over, a lot of migrants moving everywhere, and there's been a lot of destabilization, and interest rates are through the roof. And this Wednesday, most likely, this guy's going to raise interest rates again. And what do you think is going to happen around the world? So this is not a good credit environment. Here's the thing: I'm not saying that it's not a good investment, but I'm saying this stock should be $5 right now, considering the macro. And if it was $5, I'd completely agree with you. But it's a $40 billion valuation that is, it's in the stratosphere compared to its moving averages. But it's also come after a long period of accumulation. So I don't know. Like, I'm not saying that it might not get to these crazy valuations, but I think that we're going to eat it. We'll see a pullback before you go higher. It has to test those previous levels. And then I also think that if the big boys bought this bank right at IPO, that to me is just like, yo, just so you know, we could buy you. Like, just so you know, I'm going to come in and buy 5% of your company, but we could buy you. Because that's exactly, I'm telling you, this is how we all felt. What you're talking about is how we all felt about ING. It was great. And so many people were flocking to it. And then one day, acquired. It was the same thing with ShareBuilder. It was like the best investment platform. It was the Robin Hood of the day. Their thing was, it wasn't even like fractional shares. It was like, they allowed you to, because back then you had to pay brokers to execute the trades. And sometimes the fees were pretty high. They had like a monthly fee, which was like $12. And then you could do automatic like trades every Tuesday. So if I wanted to buy Apple, I would say, deposit my money in my bank. And on Tuesday morning, they would execute all your trades. And that was the way of getting new people who'd never invested before to invest. But man, that worked for a few years. And then E-Trade bought them up because they're like, we don't need somebody coming in here disrupting our business. You've gotten a bunch of customers. We're using you as sort of like a testing ground. You're showing us what some of these customers want, maybe products that we haven't been offering. And then we're going to come in and we're just buying you out.
Yeah, but that can happen. But like I said, it'll be at a very strong valuation, a very strong. You're like, I don't think they'd sell this less than 2.5 times what it's worth today. That's $100 billion exit. I'll take my chips off the table for that.
That would be like a 2.5, 3x, which is, trust me, a 2x. People shit on 2x's because they see these. I'm already up
over 100%.
Yeah, that's great. Then you see, in your position, you're sitting pretty, and that's the caveat. You're already sitting pretty. You basically have no downside.
Hey,
so why weren't you telling us about this when it was $5? This is the point. Why are we doing Stock Tank when it's $12?
I was posting about this company back in January. I think January 18th or something was the first video that I did on Nubank saying I was purchasing.
Right, and it was at $3. See, if you were talking, bro, if we were talking
I
right now,
was. You go
with this
back.
thing at $3, and you're like, "I'm gonna do a stock tank," I'd be like, "Dude, that's when you wanted to buy. You wanted to buy this thing in January because it was the third time it hit that $3.45 level where it's like it's time to go. Everybody that wanted to sell had plenty of time to sell, and now there's a whole bunch of new people coming in, right?
Yeah.
And that would have been the time. So to me, this seems like a good company that I have missed a majority of what I think the returns are going to be over the next, say, 12 to 18 months in the environment that we're at. That's what I.
But it's like talking about Tesla, and we're in 2019 right now, and you're going, I've missed it. It's like you haven't missed anything, dude. We're just getting started. This is world domination.
Well, it's a little different because banks are susceptible to these macro environments, man. And it's the first place, right? Everything hits people's bank accounts.
I would say the macro is probably, I think we're at the top of the interest rates. It seems like now's the worst time. Now is when the banks are doing very well. It's why Nubank and why SoFi have seen.
Then why is this stock at $7, $8 right now?
What do you mean? It's ran
You're
up.
saying we're at the worst of it, right? We're at the worst of it. Why is it at $8 right now?
No. I think so. I agree. Maybe we're not at the worst of it. I think that people are now starting to see that interest rates might actually stagnate for a little bit, and that's a lot better than increasing. And so people are willing to put the risk back on the table. You look at all the investment money that's going into Upstart. It's because the macro is improving. People like everyone thinks whenever buying a stock that they're the only person that's looking forward. Okay. Every single investor is looking forward. Okay. You're looking at what's next. So why are companies like Upstart, SoFi, Nubank, all these finance companies improving in stock prices of double or even more? It's because people believe that the macro has capped out. This is where the worst is over with and the winners have survived.
Okay. Well, we'll see. Because Powell's going to tell us, look, Nubank's earning is in 22 days.
And that's fine. That's fine. But also,
Powell's going to say something on Wednesday. These words are going to fly out of his mouth.
Right? Different market, though. Different market.
But I'm saying words are going to come out of his mouth. Because here's the thing. Okay, you got $40 billion sitting there. Yeah, it might not affect Nubank directly, but it could affect the stock price. That's the difference. Markets don't give a shit. When markets get scared, this is the thing people don't understand. Even if you're holding great companies, retail investors that believe in the companies, we hold. Institutions don't hold, bro. They have a 5% stop loss, and they don't give a shit. They sell indiscriminately. Everything's got to go. Like you saw with the regional banks. When one bank is a bad actor, they're like, get rid of everyone. It's like just kicking everyone out of your party. There's like everyone out. And then we'll revisit this later, but we got to clean up the mess. And that's the thing. It could hit the stock price, which could be phenomenal. Because if it hits the stock price and the underlying core business has not changed, then they're just going to continue to print money and they're going to continue to get people. And it's going to be, it's going to be off to I wouldn't say the races. It's going to be off to the bullfights. Or, you know what I mean?
Yeah. You know what? If the stock drops like 20, 30%, I know my audience is loving everything that they're seeing. It's hard to not. They just don't like the valuation. So if this stock does start to dip, it'll be like a piranha frenzy.
Right. A 20%. Here's the thing. A 20% drop from here would put us at $6. $6.
There you go.
I would like to see it at its 50-day. What's this? This one's the.
Okay.
I'd like to see it around the $5 level. If we go back to like that $5 level, I go, good. I'd love $3, but let's be real. We'll probably see $5. We see $5 because that was like a previous level. That was a previous level of resistance that it just popped through. It only popped through the third time it touched it after the initial cratering, I'm saying. So if it goes back to that $5 level, if people have set like algorithms to trade, then there's going to be a lot of action around there. And if it does get back to that $5 level, I think that's where it could build a real base and then potentially move higher and past the $7, $8 and on its way back to its IPO.
So, Carlos, I do really appreciate you being on. We really do have to wrap, though. I like you coming on the show. Maybe you should come on more often. I like the idea.
Here's the thing. I like the idea of this, and your audience might not appreciate this now, but the real benefit of what you're doing now is 6 months from now, a year from now. That's when these videos. I'm telling you, these videos, you're going to see the views on these things go up. because people will see how it played out, and depending on how it works out, this could give you guys some real credibility.
So I also want to mention with that. Oh, Tevis, just one quick second. I just want to. Oh, unless what were you going to say?
I just wanted to say one last thing to wrap on new.
Sure.
Just with regards to that valuation, I mean,
He's got one more
no,
time.
no, but like, I get the argument, but I also can formulate the counter narrative to say, well, fuck, like we've been investing in SoFi and making a podcast about SoFi for the longest time, and SoFi, like the argument cuts both ways to say, well, if this were to go back to 6, I would buy it now. The same as somebody who missed SoFi at 4 would say, oh, if SoFi were to go back at 6,
Yeah.
I would go into that. And
when it was 12, dude, $6 was unheard of.
Exactly. So you have this recency bias. But I get it because it's comparative to revenue. So on a price to sales basis, like they're more expensive. I get that. And this is not an apples to apples comparison, but I just wanted to make I just wanted to paint the picture where SoFi is a $10 billion company and they have 6 million members, and then Nubank is $36 billion company, but they have 80 million members. Obviously, it's not apples to apples because it makes peanuts compared to what SoFi makes on each given member. But it's promising is what I'm saying. So I'm just presenting the counter argument of even the valuation. If you think that it's going to go up, then yeah, there is recency bias, but you also don't have a lot of time to play with. This company has only been public for a year.
That's another thing. I think what Tevis is saying is like, I had a good time on the first date. I'd see her again, but I'm still leaving my options open. I'm still on the dating apps, right? You're not shutting your profile down yet.
So for those that want to take this stock on a 3rd, 4th, and 5th date, okay, today I did just post.
So you'd have to kill me.
Today I did just post a full deep dive. It's called New, the fastest millionaire maker stock you don't own. Okay,
not clickbaity at all, guys. Not clickbaity at all.
You know what? I believe it when I say it. There's a lot of information I didn't even share on this thing, even more in depth. So if you guys haven't seen that, go check that out. Aside from that, this has been the Stock Tank. Sorry, Carlos, go ahead. Finish it up. Cancel my outro again.
I think a great comment to leave it on is your boy SAS5 at 652. It's worth mentioning. It's worth pulling it up. 652.
If Tanner went through 2008 sell-off, he'll never touch Nubank.
He would never touch Nubank. Yeah. And yeah. I commented there's a stock market PSD that is real, which can also fuck you because it could make you gun shy when you need to, right? When it make you be fearful when you shouldn't be fearful. But anyway, this was great. Thanks for having me on, guys.
Thanks, guys. Thank you so much for the 3rd episode, 4th episode. Tevis will run a poll. He's muted too, so he doesn't know that.
Muted himself.
Okay. I was just going to ask. We don't know what's going on 4th episode. I'll run a poll. Sounds good.
Run a poll. Bye. Thank you.
See you later.
Thank you. Bye.